Hello, we are back again now to talk about the stock market. And as a remark, we always bring those videos to help you, to help our viewers to get an overview of what you can do with technical analysis for to create strategies, trading strategies. It's important that to mention that my presentations are just for educational purposes, and to put a trade in the market you need to know a lot more than what I mentioned here. And if you'd like to find out more of what you need to know to create your own trading strategies or to understand technical analysis, I invite you to visit our website at www.taacademy.com and take a look on what we show there. We have several courses on risk management, on technical analysis, business planning. It's really a sequence of courses, a really complete training if you would like to become a full-time trader, or if you would like to be an investor that manages your own money, your own portfolio. And what I teach is pretty much related with my own experience, so it's I'm just sharing my experience with you, and through my teaching and coaching and mentoring, I help my clients to achieve their full potential as a trader or as an investor. So let's move to the charts, starting with the S&P 500. The S&P 500 is one of the strongest indices today in US, and which is quite good because the S&P 500 is a broad index. However, I still don't see a lot of chances for the market to move higher to the point of breaking the previous high, the previous top, which was 1343, and 1443, and back at the end of February 1444, that was the high. So around that region, 1340 was the high until now for 2011. And even though the market it's moving up today, the S&P 500 is moving up, I still don't see enough strength for the market to break those levels. My expectation is that we will find resistance in the 1300 region, and then we are going to move lower and look for that region here around 1230 points on the S&P 500, that region. Notice that I don't give precise numbers, because the market always moves a little bit ahead, or it's a little bit shy of the main resistance point. So if we keep the region in mind, it's easier for us to understand the market movements. There are techniques that you can use to find very precise limits, for example using Fibonacci or using reverse engineering on indicators or on price statistics, but those numbers have always a probability of being right, and most of the times the market is shy of a few points or goes beyond those levels for a few points. We teach some of those techniques in our courses, but for those presentations, for the sake of understanding the overall chart movement, price movements, we don't need those very precise numbers. The Dow Jones, it's also heading towards that support level around 11,450, but right now it's in a pullback to the 11,900 region. That's where I expect the Dow Jones to stop, in that region, 11,900 or even 1,200. It might reach 1,200. But after this, my expectation until now is that the market is going to head lower until find support in the 11,500 region, 11,500 region. So, well, what will make my mind change if we break above the former top, which is at that point in 12,390, in that region. So if we break beyond that former top, that's what I expect, that the market is going to be going up again. But until then, it's still a correction, but it's a downtrend, but a correction. It's not a major movement down. It's not a bear market that is going to persist for years. Let's continue to follow those movements. We may have maybe a few more weeks of downtrends. My expectation for 2011 overall, it's for a positive year, but it won't be by as much as we were in 2010. I don't expect like 40-50% gains on the indices. We are going to have gains, but it won't be that much. So in the Nasdaq, we are also moving down, and we will find very good support around here in the 2175, around that region. That's where I expect that we will find support for the Nasdaq. Until we reach at that point, or until we trade above those levels here, the high it's 2400. If we don't go beyond that high, we are still going down, in my opinion. So we are already in a downtrend. The moving averages are starting to move down, and at that point we need some sort of pullback to the moving average to be heading down again. If you are waiting for a short opportunity, when the market reaches the moving averages, it might be a good short opportunity. Let's see. Let's watch. Well, yesterday I mentioned about oil. We are in a season, in a strong season for the oil and for the oil companies. I mentioned over that week that we found support here. My expectation was to have an upwards movement, and I don't see it still as the oil going back to higher levels. We are trading up, yes, but I think we still need some either sideways action or some retracement here to find some accommodation in the prices, then we are going to head up again. I expect that the oil will be moving up for a few months ahead. Maybe until June, July, we are going to see oil heading up. And that's quite normal because of the driving season in North America. This is the United States Oil Fund, so it follows New York prices for the oil, and that's the normal behavior. That's the seasonal behavior for the oil. It's nothing out of the blue. Natural gas, it's starting to make some waves, and until we move a little bit higher, have a pullback to that level and start moving up again, I still don't see a bull market back to natural gas. The overall trend is down. Look at the moving averages. They are all pointing down. The only one that is flat is the 20-period moving average, but it's not sufficient. We need to make a lot of movement up to see a change in trend for natural gas. Keep in mind that the season it's not very good for natural gas. There is a lot of speculation that Japan will be importing a lot of natural gas. Maybe that's the reason we see that strength recently for natural gas, and we need to watch to profit from those out of season strength strong movements, but it's still not, in my opinion, it's still not the moment to jump into with 2 feet in that wave. It's good for the day trading though. It's better to follow up because some day trading opportunities might arise. Not today, but in the next few days I believe we might have some good day trading opportunities here. One stock that I would like to mention, because, well, first because I like it, second because it's in a good moment, it's in a good season for that stock, which is Conoco. Conoco is one of my favorite oil stocks, and usually it has very clear movements, follow trends very well. I'm including here an upwards trend line, an uptrend line that I'm drawing here to show one technique I use for trend lines to find channels, and that technique, it's not very common. You don't see people that often using this. By the way, the way I use it, I've never seen anyone doing this. So what I try to do is to find levels where the market might find support or resistance, and I use a wider channel to start. Well, you notice I plotted an upward trend line. I created a return channel for that upwards movement, for that uptrend, and now I'm including here other levels that offer support and resistance, and those levels are created by plotting parallel trend lines Fibonacci levels on the channel. And if you notice here, I'm almost done, just changing colors to make it easier to see. You may notice here that those two levels are important levels for retracements and important resistance regions when the market does not reach the other side of the channel. So right now we are in that region. We still need to go down to that trend line here. The market did not reach the bottom of the channel, so it's my expectation that we will trend down until we reach that level. So we might see some downwards action for the next few days. What will change my view? Well, my view will change if we continue trending higher and we close above today's high. By the way, if we close above yesterday's high today, we might not trend lower. But if that happens, if we close below yesterday's high, in my point of view, the highest probability is to look for that bottom of the channel. Another company that I would like to show, it's a Canadian company now, it's National Bank of Canada. It's in a very strong uptrend. Yesterday I told my clients that National Bank broke above a very closed above a very important resistance level, which was 2011 high, and it was an interesting buying point, and if people were considering going long, that would be a very interesting point to go long. And indeed today National Bank continued to trend higher, to trade higher. So let's continue to watch. We might be changing that channel here, which is the channel that prevailed in 09. We might be changing that channel to another one, and that's the other one that I'm going to develop on a study over the weekends and present to my clients next week for next week market. Another company that is also Canadian company that is also in a very interesting movement, it's Bombardier. Bombardier is trading higher, and we mentioned that to our clients. Today's Thursday or Friday, right? Yeah, we mentioned that on Wednesday that Bombardier was an interesting buy, and if the high of Wednesday were breached, and that indeed happened on Thursday, yesterday, and we are continuing to trend up today. I expect that we are going at least to reach the former high, which is in the $6.74 range. Another interesting thing that I would like to show here with Bombardier, let me put more data here. It's the same type of construction, very similar of what I did with Conoco. And if we create here a return line for that channel, and we adjust here for that region of those highs, and we can even make a wide region including that high here, or including the low of those candles here, because that's where the gap is closing. So if we plot that line, and I prefer that level here, I explain why on our training about trend lines. If we look how that trend line was important in the future, because that trend line could be in place back in October last year, when we reached that trade line in in January, the market had a very hard time to proceed higher, and not only because of that trend line, but also because of that resistance level, which was an important resistance in the past, supporting resistance. So once we traded both those levels, the market found resistance here, retraced it, and again tested those levels now from up down, and found support that region. So here, when the intraday action told us that there was a very good potential for end in that correction that we had from the beginning of March until beginning of this week, there was a good probability that the market was going to trend higher. So even though there is not a strong indication that those levels will be breached, for the clients that got into the trades here, it's still a very good trade, worth until now about 5% until now. So it's basically what I prepared to that presentation today, and I would like to thank all of you that watched that video, and I would like to invite you to visit our website or to follow me on Twitter and drop me some questions, drop me some things that you would like to see covered on those videos, and we can keep talking about the markets. And I like to share my experience with you, and for those of you that already attended my courses, you know that I'm very open to share what I found. It doesn't mean that it's correct, but that's what I found, and I share it with my clients, and we all can profit from creating from all that learning process. It's always a two-way process. The learning process is always a two-way process. It's not just the instructor telling things to the students, but also the students giving feedback to the instructor. Well, thank you very much, and I would like to wish you all a very nice weekend. Enjoy the weather, enjoy your family, and get rest, get renewed strength for next week. We have a lot of things going up next week. Thank you.